What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, I thought we were going to talk about Wynn, and then I looked up and I realized that Wynn doesn't report for like another week and a half. So, no. So, pulled an audible, and that audible was American Express, ticker AXP. Now, some good stuff going on here with American Express and just general thoughts, I suppose, on the market. I don't know if you guys caught the daily dive yesterday, but I did have a chance to look at some charts, and one of those charts being the Russell. Basically, small caps went up and hit a fib extension and ended up pulling back a little bit. So from a technical perspective, yesterday's selling actually made perfect sense. Now, as I do every morning, I was running the Momentum Trader screen this morning, and I saw 57 stocks, I think. That's a lot of stocks to pop up on that list. Let me tell you, I have a couple of different screens I run, but this was I have one that's one I run every single day, and that tells me what sectors of the market and industries are kind of performing the best. And one thing that jumped out was that it was all banks, brokerages, and energy companies, which fits in line with my intermediate term thesis for the market, so that was good. And also confirms sort of this earnings bias that I have. Now, if you remember, actually, you guys may or may not remember, because I don't know how much of that I let loose here, but I was really bullish on energy companies a couple of quarters ago because I saw the turnaround. But seeing the turnaround in the earnings and seeing the turnaround on the chart are two completely different things. I tried to kind of head it off at the pass, so I allowed kind of the earnings side to take over, and we were wrong. This is when the fusion of technical analysis with the Zacks rank really works. And those out there that think technical analysis is all voodoo, I love getting into arguments with them because it's rare to find like a mathematician who thinks technical analysis is voodoo because they understand sort of the mathematics behind it. It's not necessarily predictive, but it's indicative. So I'm not saying that, oh, this moving average crosses over here and then now for sure this thing's going to go up. It's not how it works. But you know that in trending markets there are certain mathematical characteristics that happen or that are displayed, that just happen. They just have to happen for the numbers to keep going up in that sequence. So if you could take a more technical screen like Momentum Trader, couple that with some of the more traditional fundamental metrics that we look at Zacks, and then when that comes together, then that's usually a powerful sign. So right now the powerful sign is really in these types of stocks. So would I put American Express in there just because they're in the world of financials overall? I think for now you have to kind of lump them in there a little bit. They weren't specifically popping up. When I say they, I mean AXP, MasterCard, Visa. I suppose you could start to throw PayPal, some of the payment processors in there. And the other thing is that the threat of blockchain has yet to hit these guys, and I don't think it will for a little bit. And we see today a little bit of selling in the Bitcoin space, and that's a whole nother. I mean, it's an interesting day today, which I'm glad because I've had such a stretch of boredom. It's been like watching paint dry over here. I know the market goes up, and that's a great thing, but man, does it make for some boring nights when I'm trying to piece together my write-ups for everybody and keep things entertaining when it's just like, well, markets are up again. It really, it's not so bueno. Personally, I like it more when there's something to talk about. So today we certainly have that. So I'm glad for that. So I know that was kind of a roundabout way to get into what I'm talking about now here, and that is American Express. Now, man, do I love the price consensus and EPS surprise. And what's up, everybody? I didn't even say hi to anyone. Kurt, Jim, Richard, Aaron, and Mr. Wallace. How are you folks doing? Now, if you were a guy that was looking at AXP prior to 2016, you probably would have nothing but bad stuff to say about it. And then if you were a trader that didn't look at the price consensus and EPS surprise chart here, you would wonder if this run here was warranted. I mean, stock has virtually doubled from 2016 lows. Jonathan, how you doing? Welcome. And for the new names out there that maybe I haven't seen in the live show, be sure to subscribe to, well, send us the email rather to livetrader@zacks.com so you can get updates, email updates when these shows are going to happen. I know that obviously YouTube does give you a little bit of a notification, so subscribe to the YouTube channel if you aren't already. But in addition to that, if you send the email to livetrader@zacks.com, then you get hooked up. Then of course there's the chat room here on Discord where somebody's in there pretty much 24/7. Video Depot, how you doing, Video Depot? Pretty much 24/7. You know, there's somebody in there. Hey Tracy, how you doing? And that's the discord.gg/ and then there's the P, the W, you know, all that madness. It keeps scrolling across the bottom end of the page, so I should have. I keep telling myself I need a fancier version of that, just a quick custom URL, which I'm sure I could do, but I just haven't done it. Okay. Now, black line corresponds to the right y-axis, which is price. The green arrows are earnings beats. The red arrows are earnings misses. These multicolored lines represent the evolution of our Zacks consensus estimates over time and correspond to this left y-axis. So a few things to point out. Trouble, 2015 starting for American Express. Earnings contracted. And then something funny happened. They just figured it out. Right around Election Day last year. Looks like they started to figure things out. And look at how the estimates, not only for the current year, but for next year, have jumped significantly. And the stock price has followed it along. So one thing I like to look for is growth. And you obviously have that. And then I like to see if the stock has moved in step with the growth. So both of those have happened. So sometimes when you're looking at this chart, I guess the most famous case is Micron, where we saw Micron earnings really start to start pushing up there, and the stock was going sideways. That's when you knew to buy. So I try to look for divergences between what you think should be happening based on the price consensus. Based on the consensus numbers, and then what's happening with the price. So when you see divergence between the two, that can create a fantastic opportunity for you, either overbought or oversold. In this case, that's not jumping off of the page for me right now. So things are good, very healthy numbers at American Express, and the stock is on the rise. So this is all, it's all good. It's all good right now. Okay, let's look at the detailed estimates page. See what's going on over here. We've got them at a Zacks rank #1 strong buy, which is pretty good, and they're breaking out to new highs. Going to report after the bell on the 18th, so you get the rest of the day today and all of tomorrow to decide if this is something you want to mess around with. Like I mentioned before, Zacks rank #1 strong buy. Now, don't worry so much about the industry. So sometimes when the industry rank, the specific stocks in the industry are very representative, and it makes sense. Sometimes it doesn't. I think, I would have to see. Let's look at this real quick. I know I'm going on a tangent, but I get bothered by these, and then I have to see it. I'm gonna go to the quote overview real quick, and then we're gonna come back. I just wanted to see who we have in this industry, and you see, folks, you got Houlihan Lokey. Should I be embarrassed that I've never heard of that place? CIT Group, Moody's. So miscellaneous financial services is where we have them. So again, that's sort of the reason why I like looking at the Zacks rank, but sometimes, or the Zacks industry rank, but when it's one of these broad industries, I tend to put less weight in it. Just something for you to check out. Okay, now first let's look. They had, for sure, Mr. Wallace, definitely an impact, the whole Costco thing, the divorce from Costco. But that's good. You know, you lose You lose a large customer like they did, and it forces you to get better or get gone, right? You either adapt or die. And so I think that has ultimately helped American Express's business. Funny how that works. Let's look at the revenue numbers here. Current quarter, 8.7% growth. Next quarter looks like 7.82. We're going to fill this in. Again, you guys notice this has been happening a lot where we're getting non-applicable for the current year growth numbers for whatever reason. And then we got next year 6.86. So decent amount of revenue growth here for American Express. How does that translate over to the EPS side? Look at this monstrous quarter they're planning. Almost 70% year over year EPS growth for the current quarter. Next quarter still looks like 21. The current year, though, is supposed to round out at a small contraction, while next year is supposed to get better. Here's the thing. Next year is going to be better for pretty much everybody. Well, at the corporate level, it's going to be better for everybody. I don't know about all of us employees. We're probably not going to feel the same love. But at the corporate level, it's definitely, you're seeing double-digit plus EPS increases for pretty much everybody. And that's obviously a function of tax reform, right? So a lot of these numbers are juiced, but we knew they were going to be juiced. So this first quarter here, so far, the reactions have been muted to these earnings reports, I feel, where a company will report, and even if they're good numbers, like the expectation, the bar is just so high. So nobody's really getting beat up over anything, but nobody's really getting jacked up to the upside either. So there's a little bit of both, you know. So it's like it's cutting both ways. There's not enough, because things are so good. Nobody wants to be bearish on any of these. But on the flip side, because they're so good, it takes a lot to surprise the market and really push the number higher. So you have that. Different kind of love there, Jonathan. Different kind of love. I was referring to the green kind of love. But actually, that's an interesting point. I haven't asked anybody if they're seeing the. Okay, so we went on. I know, here I go off topic again, but the anecdote that I had of the cars, right? So pretty much everybody, I know 3 or 4 people that have bought cars over the course of the last few months, and nobody has had to prove income or bring in a pay stub. And I'm not talking like, so my mom did buy a Honda Fit, but I didn't buy a Honda Fit. And for that Z06, they did not ask for any income, and that was a pretty significant loan. So the credit's just getting a lot easier, I suppose, to throw around. But I also wanted to see if people, if any W-2 guys out there are seeing this next year, or is it getting a little bit better for you? I guess is what I wanted to ask. I'd like to get the sort of the survey, the anecdotal evidence of is this trickling down, or is it going to be another year until it potentially trickles down? I don't know. Just wondering. And you don't have to give details, but just, you know, does it look like this next year is going to be more or no? Okay, let's see. How do you stop a bull from charging? You take away its American Express card. Hi-oh! And we know Jeff has spent too much time locked away in his house over the course of the last few days. And now he's coming up with American Express jokes for the bull market. And I'm the old one. Okay. All right, now let's take a look at the earnings estimate revisions. Just the direction, right? So you do have analysts just over the course of the last week who have dropped their EPS estimate for the current quarter. Next quarter, you got 2 of them that have increased their number. Current year, we got a dropper, and then next year to the upside. So it's a little bit mixed. Surprising that that mix results in a Zacks rank #1 strong buy. Now, why is that? Let's look at this overall effect to the consensus estimate trend. So a $1.53 to a $1.54 for the current quarter. Next quarter's gone from 153 to 163. That's not where the huge jump is. 581 to 585, not where it is. Here it is, my friends. 647 rather to 683. That's a pretty significant move in earnings estimates to the upside, and that's the reason for the favorable Zacks rank is you have that huge magnitude. So what that tells me is, well, first of all, there was no one moving in the opposite direction here, right? And these estimates here for the current quarter and current year were small, so they just kind of inched them down. Whereas those analysts that were increasing their estimates did so pretty significantly. The other thing is, since the current year and the current quarter are kind of rounding out at the same time, you can sort of lump both of these in the same group too, so because they're basically going to be looking at the same thing. So that's why we've got a Zacks rank #1 strong buy. Okay, now let's dig in. Look at some historical revenues, and hey, good. Hey, look at this. We do have the miscellaneous finance. I don't want to do that. I'm going to do a ticker. We're going to look at MasterCard versus. Now, these are the revenue numbers. I don't care about that. It's just when we get to the valuation, so we're going to keep that in mind. Anywho, wow, these numbers are tiny, huh? Revenue contraction, I suppose, is a normal thing for American Express, and you do have some of that overall for the year. But here's the important point to note is that this quarter you do have revenue growth. So pretty much all of the contraction was within this first quarter and second quarter, okay? And then really the expansion started out of there, and now it's been picking up. And they expect this to continue throughout the course of next year and even further out a year after. So things are looking good in terms of the revenue growth here, longer term on American Express. Now let's look at the EPS side of things. 2.7% for the current year, but look at this quarter, monster. It's a $1.54 over 91 cents. That should be a good thing. And now looking forward to the next quarter, 163 over 134. So you do have lower comps. That bar is nice and low there for next quarter. So that should bode well for the guidance looking out and potentially be a little bit of a bullish tailwind coming into this earnings report. So you do have a couple of good signs there. Now let's look at valuation. Not the valuation model. I hate it when I click that button. Ugh. The only reason why I hate it when I click that button is because it takes me a little bit longer to get things together here. Okay, now forward 12 PE. And let's see what that has been here for shares of American Express. On the forward 12, you have this year is basically bounced between 15.29 and 12.92 for the most part. So that's not too bad. And moving out forward, it looks like 15.23 so far where we're at this year. And that does pale in comparison to MasterCard. Look at MasterCard, 30 times future earnings. A little bit overpriced there, MasterCard. Who else do we want to take a look at? Visa, maybe see the scenario that's going on over there with Visa. And Visa's at 28 times. So if you're just looking at this from, in comparison to some very large competitors, Amex is cheap here at 14 times forward earnings. Now, I know let's compare this to the S&P 500 here to give you an idea. I think last time we checked the S&P was like 18. Look at it, 19 times earnings. So AXP actually trades at a discount to the S&P 500, which may seem a little bit surprising. Now, if we were really getting into the nitty gritty here, what I would do now is I would take a look and see sort of in their revenue, where does the money come from, right? How much is from credit cards and how much is from other things? Perfect segue for me to show off a little something that my buddy found for me. Now let's see if I can remember it, where it is. Non-financial metrics surprise. That's right. Non-financial metrics. So look at this. We've got this database here of all of these items that American Express breaks out in their earnings reports. How cool is this? So I could show the number of cards that are in force, and then so this is a number that you should be looking for, where they're going to tell you how many cards are in force this quarter and what the reaction is. We can also see here the card build business, the card member receivables, global commercial services. So we can look at all of these broken out, which is pretty cool. Look at, you can even see how many card member loans are 30 days past due. So this is pretty cool. Let's see if we can find, look at net interest yield on card member loans. So this is obviously something that is going to be ticking up here over the course of the next few months, right? That net interest margin should increase for them. So all pretty cool stuff to look at. This is part of our non-financial metrics here. Pretty cool stuff. So let's just we can look at the card member loans. Is that what we want? Card build business. I mean, what number do we want to even look at here? Let's look at this. The ending balance of their card member loans. Look at this. Ticking up. So they're expecting a huge uptick in that heading into December here. Notice you didn't have that much of an uptick a year ago period, but they're really thinking that they're going to see it now here. And also down here you can see the previous surprises. So last time they had a 9% surprise, and then it shows the impact here. This little chart, the actual format of this should look familiar because it's just like our consolidated surprise, which you're going to pull up here. Here you're going to see just the earnings surprise and the sales surprise. And if you notice, a whole lot of nada, save for when it actually does move. That was a weird phrase, right? But basically the thing doesn't do much unless it really moves. So it either does nothing or she really moves. All right. Armed with that knowledge, let's go ahead and pull up some charts here. You know what else I'm missing? And Dr. Paul isn't here to tell me about it. I'm missing the Tiesto for Dr. Paul. They're basically missing just all of the music. Now here's the cool part. I don't even know if you guys could hear this. Hey Google, play Zac Brown Band.
Okay, playing Zac Brown Band.
And she responds. And she starts playing a little bit of Zac Brown for me. That's right, guys. It's all about the connected home right here. Welcome to the 21st century. All right, AXP. This is just to infuriate Jeff, too, because I know he's probably not the biggest Zac Brown fan. But that's all right. I don't even know if you guys can hear that, to be honest with you. So, American Express, what can you say here? It just started trucking and just never looked back. And this is a move that's basically from October of 2016. I mean, that's a pretty long time ago. And you do see here just a few areas where it gets in and there's these volume spikes that it fights through. Lots of volume here in this high 90s area. But it looks like you're on the north side of that, perhaps. Let's scroll in a little bit. Cool part about this is, you know, as you get closer, it adds a little bit more perspective. And here you can see AXP has really started to work through some of that noise. And then the last real area of contention is just north of that 50-day moving average here near 94-ish. So you do have that. And then the 50-day moving average providing plenty of support for you on down at 97.50. Okay, so 97.50s. Keep that in mind. And then 102.39 here is the top here. All right. Where's my bar chart? Let's see what we got going on over here. Put it to the options quotes on AXP. We're going to take a look at this front. This is the monthly expiration, which is cool. Change it from the stack to the side by side, so you get calls on the left side and the puts on the right. Basically, it's at 166, so we're going to use a $100 holler. Could I use one? Actually, I could use 101, but maybe I should use 101. I feel like once I scroll down, this number is going to start dropping, and it won't matter anyway. Let's not get too cute. Plus, these numbers are delayed. 100 is just easier, so that's what I'm going to do. Notice right off the bat, you got 5,500 calls and only 1,200 puts, kind of jumping off at the page at me. Not to mention, there's a big 16,000 contracts at open interest at the 105 call. At the money put, 157 by 154, 154 by 157. Let's call that 155. The at the money call is 190, so that's 345 they're looking for on 100. I'll let you do the math. That's right, 3.45% is what they're looking out of shares of American Express. So that puts you here, and that puts you, well, I guess off the page here. So let's go ahead and switch this up. You already know what I'm about to do. I'm going to go to the February expiration to give a little bit of cushion here. Yes, we're going to come back to the front week for the real fun stuff. Yes, we will do that. I promise you that. All right. Now, let's tuck it in one more. Let's look at February 9th. Now, the reason why I like to look at that and go in like a week before that monthly expiration is when you have the monthly expiration tomorrow, you're not going to get all the strikes in that back month. That just doesn't fill out until a week later. So here we get a little bit more control as to what we want to look at. On the bullish side of things, keeping that 100 as an anchor, I think, is a good idea. The market was looking for a 103.50. That's what we were saying before. I'm comfortable with that. Let's look at just shy of that, a 100.103 call spread here on American Express. Again, this is the February 9th expiration. What does that look like? 255 is what it's going to cost you for the $100 holler. Subtract the 126 you're going to get for selling the 103 call. That's 129. The difference in strike prices is $3 minus a 129 is $1.27 on 129. Good for 132%. What would you need to make that? You'd need shares of AXP to close at or above 103 at expiration on February 9th. Bull, debit, long, Feb 9, 100, 103 call spread for a I already forgot the number, 29 debit. Now the bears, this 50-day, 97.50. I think that's where the bears should be looking. So check out 100, 97.50. And I know sometimes I do the halvesy. Not today. Today we're going for the gusto. I think you got to look at the whole 250 if you're a bear on this, and you're right. So the $100 put's going to cost you $209. Selling the 97.50, you're going to get back $1.13 of that. That's 96 cents. Difference in the strike price is $250 minus the 96 is $1.54, but you can make a 96 or 160% rate of return. Bear debit long the February 9th 100 97.50 put spread for, what was it, 94, 93? I already forgot what the number was. 96. Right? My goodness. 113. Stop. I think it was 96. 209 minus 113, 96. There you go. For a 96 cent net debit, ladies and gentlemen. There you have it. Now, I think it moves. I think finally it moves. And maybe it's folly for me to think this way. With the stock already at $100, we know the psychological level that 100 really is for these stocks. But this is what's kind of making a bull case for me, is that you had this huge chunk of volume that the market has already kind of fought through, right? You fought through to the upside. Now here we are north of that, so I think this should provide some support should it continue to come down, and you do have a little bit of a downtick intraday today, but that's not going to do much. And there's been so many quarters in a row where it's done absolutely nothing, and we've seen the banks haven't done much throughout the course of these last few quarters, but we do know, or the course of this last quarter, that's why a lot of these condors have been working on these bank stocks. I guess the natural thought is, okay, that's going to happen with American Express too, but I don't think so. I think it's going to break it. I think we're going to break 100. I think it's going to go to new highs. So that's what I'm looking for here, especially when you catch a little bit of that post-earnings drift, knowing that you have the huge 69% beat that's going to, or 69% EPS growth coming up here, and then obviously next quarter looks good as well. So that's kind of my bullish thesis for American Express. Now let's get a little crazy here. Looking at this front week, Lottos, 104s, 105s. Think you can even. That's a one-day trade. Give yourself a week, even if you want to be a madman. Give yourself a week as a madman. You could still look at these 104s for 70, 105s for 49, somewhere in there. Don't you think we're overbought in general in the market? We could be priced in and then rip. So part of it is priced in, not all of it is priced in. So we can price in the actual EPS move. I'm going to pull this up for you guys. If you haven't done this before, can I get out of here so this looks normal? I can. So check this out, folks. Okay. Let's see. First let's ignore this altogether. Let's pull up Shiraz's piece. I love it. The stuff that Shiraz does in this earnings analysis is fantastic, and I'm glad he does it, because then I can just steal his work in my write-ups, which is great. But look at this. Table below shows the sector's Q4 earnings growth expectations. So this is for finance, okay? And here we are. Just this quarter, right? Real estate supposed to be huge. Finance supposed to be pretty good. Okay? And then now look out the rest of the year. Real estate is where it's at, right? These are huge numbers. But look at finance now. Continuing out for the next several quarters. Okay? Better than the banks, right? So that's good stuff right there. So solid growth projected out. So has 15, 16, 30% growth been priced in? No. And the other thing is, these estimates are just starting to creep up right now. They're just beginning to creep up. We also don't know what the actual impact of the tax cuts are going to be. We know the dollar amount that these EPS estimates are creeping up, but we don't know their overall economy. What does that do? Are people going to be spending more money, less money, whatever? So the short answer, no. But also, you contradict yourself. Overbought and priced in are two different things. So if you thought it was priced in, you'd think the market would be fairly valued. If you thought it was overbought, you would think that they more than priced in the expectations. So there you go. Lottos, these are 105s, I think. Lotto, you can do the Jan 26th 105 call under 50. Trade that pays, under 40, under 50. Under 50. Sorry about that. Trade that pays is the bull debit. And that's it, folks. That's all I got for you here today. Good stuff. Solid discussion. I have to lean on that Zacks rank and those huge EPS numbers to the upside and think that American Express is going to do well. Haven't had many directional plays here in Live Trader as of late. So I think this is a good one to use for that. And there you go. So tomorrow I'll be here with the GBU. On Friday, we're going to do at 11 o'clock on Friday, we're going to do, who are we doing at 11 o'clock on Friday? Netflix, because they're going to report the next week. What do I think of BA? Holy smokes, look at Boeing. Wowzers. I don't know. I don't have a snap judgment for you, Jonathan. I'd have to. It's been a while since I really dug into Boeing. So I don't have an answer for you. I'm sorry. But that's something that we can address. If you want to on Friday we'll have a little bit more time. Because today I've got Bull Bear, some other stuff I have to take care of. So remember that for Friday. Friday we're going to do it at 11 o'clock. It's not going to be first thing in the morning. So we're going to bump it to 11 because it's a more traditional kind of Netflix show rather than a morning after kind of deal. But we will talk about American Express on Friday as well. Okay? All right, guys and gals, whole crew, thank you so much for hanging out with me here today on Zacks Live Trader. I will see you all mañana for the GBU. Well, I guess you'll see me for the GBU, and then Friday for Netflix. Have a good one, guys. Thank you so much.